Let's connect with the management of with Shriram Transport. Umesh Revankar, Managing Director and CEO of Shriram Transport Finance, now joins us. Mr. Revankar, good morning. Thank you for joining us. If I look at the dispatch numbers which you got from Ashok Leyland and from Tata Motors, is there strong enough evidence to believe that the CV cycle has revived?
I see. Let us understand one thing. There were some disruption in the last 4 or 5 months. That is BS3 to BS4. So there was higher sales in the month of March. Then April, May was very subdued, and there was a GST implementation. So pricing was not known. So the one thing is BS4 ready were not vehicle were not ready, and the pricing was not known. So there was some kind of delay in decision making as far as buyers are concerned, and even when buyers were ready, manufacturers were not ready. So this situation was there up to July. So August, definitely all these things got resolved, and all the old demand came up. So it was a more of a pent up demand, and that came in August. So September also there could be some more demand which was not met in August. So whether it will continue for next 3 months or 6 months, we cannot say right now. But the ground the situation is little better as far as rural is concerned. The rural demand is quite good. The good monsoon in the last 2 years, and more area is under cultivation. The agricultural output is much larger. So all these things are positive. So there is a good demand from rural for rural transportation. Plus the October onwards, I expect the much higher infra activities to be carried out by the government, because lot of government activities are lined up, including railway, port, highway, and even the rural infrastructure. So I feel the government layout, budget layout, and whatever the pending project, all are likely to get started from October onwards. That is the post monsoon. So the infra related demand will be much higher post October. It will be coupled with the festival related demand. So there will be a lot of activity in October, November. That will definitely lead to a better sales or better demand for vehicle. But which category of the vehicle will get more demand, we cannot say. But I can see the demand for construction equipment, construction related vehicles. That demand is for sure. But freight related vehicles, especially for long distance transportation, I am not very clear right now, because GST related issues are not totally resolved. There are many people yet to come on GST value chain. Once more and more players come on GST value chain, then the demand becomes steady. Till then, the demands can go up and down, but it will be on the positive side. So it may not be on the negative side, and I feel next 6 months should be very good months.
Mr. Revankar, we were essentially asking you about the kind of growth rate, loan growth rate that you're confident of maintaining. You've kept a guidance of 12 to 15% for FY18. Can you better that?
See, this year we would prefer to remain or give the guidance at 12 to 15 only. We don't want to change it. But going forward is a yes. I think next year the infrastructure story will be much better. The economic activities and the likelihood of many of the demand cycle coming will be better. So I feel next financial year it could be a totally different story. We can grow much faster, because I feel credit demand will be much higher in the rural and the semi-urban centers.
And give us okay. And what about your key drivers for growth, especially on the product side? How will your product mix look like? There's good demand expected for the used vehicle segment in rural areas, I believe, that was seen in Q1. How much can that segment grow, used vehicles from the rural segment?
See, what is happening is the used vehicle are changing the way the kind of used vehicle which were in demand maybe 2 years back, and now there will be a lot of changes. The used vehicle which are coming into the rural market are basically with higher ticket, because the new technology vehicles are coming in to the urban centers, and the newer used vehicle are getting into the rural centers. And rural population also is becoming a little more wealthy, and their expectation and the kind of product they what they need will be little different. It is not only used vehicle, even the new vehicle demand in the rural market will be little different, and maybe with a higher ticket size. So, I feel the ticket size are likely to go up significantly, and that could be anywhere between 20 to 40% higher ticket size on each of the vehicle, because most of the vehicle will be latest and with higher technology. And India also is moving from the BS4 to BS6. That means there is a significant jump in next 2 years, and every manufacturers, after getting some kind of a difficulties in moving into BS3 and BS4, will be much more careful going into BS6, because of that they will introduce the vehicle much earlier to 2020. That means the technology shift would be there, and fuel efficiency would be one of the prime reason or prime motivation for the people to go into the latest vehicle. So, not only the fuel efficiency, and it could be in the passenger personal car segment, there could be a host of new product, especially with the hybrid and electric are making a lot of noise now, and making a lot of heads turn into electric and hybrid. So, there will be a lot of changes in the next 3 to 4 years, which is going to lead demand from rural, semi-urban and urban all put together. And infrastructure activity also, I feel a huge demand, because the kind of focus that this government has put in for infrastructure, and we are all talking about the bullet train now, the fast train, and that could start be the start, and it can spread across India over the next 10 to 12 years. So, I feel the infrastructure related activities and vehicles, equipments will also be in big demand. So, the credit demand in the next 3 to 4 years is going to be very high, both in urban and rural, and infra and for transportation.
Have to ask you this, Mr. Revankar, because rumors are abuzz about further updates on your exclusivity talks with the IDFC group. Give us what's the latest there?
See, the due diligence is on, and we are talking to each other. So, it is as per the plan. So, there is no change as on that. So, the progress is quite good, and it could be that we may be able to some conclusion by the month end or the first week of October. Then of course, there are other angles where we need multiple approvals from the various regulatory bodies, and that also may take some time, and I feel the progress is on, and it may take a little longer time if we need to wait for the response from the regulatory bodies, and we have to reply to their queries. So, everything is on. So, nothing is there is no change in the plan as of now.
Well, Mr. Revankar, how will the merger synergies pan out for Shriram Transport in particular, given that the current merger structure does entail a delisting on your company?
No, that is a broad plan, and we need shareholders' approval for that. So, we need to work for that. We have gone into this in the very positive frame of mind, and we feel that it will benefit everyone, including customer, employees and the shareholders. So, we need to talk to every one of them, take approval of every one of them. When I say everyone, shareholders, we have to take approval of shareholders, then the regulatory bodies. So, I think it will be good for the company in the long run. in the short run, probably we will not see the benefit on the table, but we need to explain the benefit to the shareholders in the short term and long term, because not all shareholders are long term. So, we need to really work on that, and we would like to come out with the right story, and we want everybody on the same page on that.
Mr. Revankar, I'll tell you the concern which I am getting when I speak to some of your existing shareholders. And the concern is very simple. Their concern is that if Shriram City, if Shriram Transport is merged into IDFC Limited, then it will be merged at a discount, because IDFC Limited is a holding company. And the stock already has fallen by about 10-15% ever since the deal was announced. So, since large part of Shriram Transport is owned by foreign institutional investors and the sense I am getting is that they may not agree for this kind of an structure, and there could be a backlash. So, how would you defend this argument?
See, first of all, the share price have come back to the normal. There's from if you look at last 10-15 days, share price have come back to the original price. So, I don't think there is a big discount as of now. But yes, you are right. We are talking to the shareholders, and we are explaining the rationale behind it, and we would like to take them along. We would definitely have to take shareholders' concern into the total plan, and accordingly we will go ahead. If shareholders are not agreeing for that, then we may not be able to go ahead with the plan. So, definitely from our side, we would like to take all shareholders on the same page as we are, both the management, and see that it is beneficial for every one of them.
What about the benefits coming in on cash flows, given that post the merger, the expectation is that the cost of funds will go down? Have you worked that out?
See, it is a very simple arithmetic. It need not have a big calculation, because okay, if you go into every stage of it and calculate, yes, we need to calculate, but we as just as a matter of fact, between if we get a rating upgrade, then the cost of funds can come down by around 15 to 25 basis point. That is very easy to calculate, and on the entire portfolio over the next 3 years, it will make a big difference. So, that is very easy to calculate, but there are other benefits which we would like to work out and talk about it. And maybe as we come public with our overall structure, we will make it public. Right now, we don't have the numbers, or rather we would not like to comment on the numbers.
Now, Mr. Revankar, just to clear the air, I also have picked up market buzz that the merger will go through, but the initial proposed contours could change. Is there any thought to that, or you would like to say that merger is on and the proposed contour will remain the same? I'm asking you very basic questions, and these are of immense market curiosity.
No, there is no change as of now. Everything is as per the prior plan only. We have not discussed any deviation on that as of now. But as when we come to public, then probably there could be something, but as of now, nothing.
You are confirming to our viewers is that the deal talks and due diligence is still on. We may hear something from either Shriram Group or IDFC Group before end of the month or first week of October. And the initial structure which was proposed, where Shriram Transport would be merged with IDFC Limited and Shriram City Union would be merged with IDFC Bank, those initial details are not going to be changed. If the merger has to happen, it will happen on the original lines.
So, as of now, yes, it is on the same page. Yes, you are right.
Have you approached Reserve Bank of India formally or informally, or you will wait for the merger to approach the regulator?
No, the post announcement we have formally approached the Reserve Bank. but it is going to be a multiple interaction, not one interaction.
Right, and we just also want to understand any talks on the pricing of the swap ratio just as yet, because I think Nikunj brought that in a little while back as well. What direction are those talks taking? Have you worked that out?
No, not yet.
Okay, well, we wish you all the best, Mr. Revankar. We hope to hear that news coming through soon enough. You're putting a timeline of about a month where all the approvals will be in place. So hoping that by the end of this month, we would hear something from your end. Thanks very much for joining us and giving us all the details about the business plans that you have at the financing company and also with the proposed merger with the IDFC Group.